Well, we've been seeing a switch from growth towards value over the past few months. And that doesn't mean that you have to switch from technology stocks into other sectors of the economy that don't have the same kind of growth prospects as tech stocks. So if you look at some older technology stocks like, well, older, Microsoft, Apple, Intel, Oracle, they've got great businesses. They have those pesky metrics like cash flow and return on capital that long-term investors really care about, yet don't suffer from, call it management issues like a WeWork or perhaps overvaluations that we might see from the likes of Peloton as it comes public today.
Are you a fan of Peloton, by the way?
I'm certainly a fan of Peloton. Had a Peloton bike for a number of years. I have yet to meet somebody who has not loved their Peloton bike. However, that doesn't mean the stock's a great valuation or a great investment.
You an IPO buyer typically or no?
We typically don't play in IPOs because of those pesky metrics that we like to see. We like to see profitability. We like to see cash flow. We like to see return on capital. 2-3 years down the road, when it's had some time in the market, we think it might be a compelling investment.
How much are you thinking right now about China when it comes to some of your tech trades?
It's hard to ignore China. Certainly in the technology space, the pieces parts all come from China. You know, we talked a little bit about Intel, which as a chip maker is going to suffer if you begin to see tariffs on chips around the globe. Backing that supply chain and moving it towards India, moving it towards Indonesia, perhaps South America, may provide some relief to all these chip makers.
Where do you stand on Apple right now?
Well, we've been a long-term Apple holder.
The
stock is about, call it 19 times earnings, and has a very strong business in the most current technologies. They're current in media, they're current in devices, they're current in cloud-based services. So it's really hard to poke a lot of holes in the 2, 3, 4 year, 5 years out for Apple. So we're not going to react to whether or not people buy iPhone 11 as they wait for 5G phones.
How do you try and figure out what the proper valuation or what the metrics are on a company like Apple? Because like you mentioned, they're the top in media. They've got technology. They've got all these different streams. They're turning themselves into a consumer company by relying more on services.
Well, I certainly think you've seen in Apple over the past 2 or 3 years a return to a more normal valuation. It had been held down in valuation for a long time because people thought of it as a device maker, not a software company, not a services company. And for that reason, they thought it was going to become the next BlackBerry eventually, where somebody else was going to compete away those margins. But if you look at it, Apple has the margins on the products, certainly great margins on the software. So they're going to weather this storm of whether or not iPhone pieces parts cost 25% more or not. It's unlikely going to shake their business. The real risk to the business is whether or not things like Alexa earphones change how we interact with technology.